Taking a look at the markets now here, 3 minutes into the trading day, stocks modestly lower across the board. Let's bring in Victoria Fernandez, Chief Market Strategist for Crossmark Global Investments. Victoria, good to see you. This morning we found out that first-time unemployment claims rose for the first time in 4 months. How troubling is that bit of news for the markets?
I don't think it's a tremendous concern at this point, Alexis, for the sheer fact that people were anticipating we might see a tick higher, mainly because we had such large states, Texas here where I am, California, Arizona, Florida. You had these states having to shift their opening plans, pull things back a little bit. So I don't think it was a complete surprise that we were going to see that move higher. The continuing claims fell. That's a strong point. I think we continue to see that number come down. That's important. But we need to watch the trend. If it goes up a little bit now because of the changes in reopening plans, I think the market will be okay with that. If we start to see a more concerning trend where these jobless claims continue to move higher, and not just the claims, but the permanent job losses. So much of this was built on the fact that it was temporary job losses. Now we're seeing the permanent numbers go higher. If that continues, then I think we start to see a little bit more concern in the market, and maybe this higher trend and all the high-flying names that have been going so strong might have a little bit of a pullback.
Victoria, besides jobless claims, we are amidst earnings bonanza, and a lot of these companies that have reported this week, trends have slowed down. Sales have slowed in July, and now they're laying people off. Do you think we are now in a period of economic stagnation, and as a result, the stock market will start stagnating?
Well, we've definitely seen these high frequency numbers that people like to watch. We've seen all that plateau. They really troughed back in April. They were doing okay in June, but now we've seen them really kind of plateau, and that's why we're continuing to see some of the news that you're talking about. For the earnings season, I mean, we knew this was going to be one of the worst earnings seasons in decades, down, I think, 43% year over year on EPS. The numbers are actually doing pretty well when we look. Obviously, we had airlines this morning, Southwest and American. We knew those were going to be bad. They said demand was extremely low in July, and it's going to be low going forward. But look at some of the other numbers we've gotten over the last couple days. Microsoft, Chipotle, Kimberly-Clark, AutoNation. I mean, AutoNation, they had huge demand coming in. Not surprising, people wanting to shift to their own personal vehicles. But I think we have enough strength in the market right now, and you add with that the Fed put that we have in place that we know we're going to have for about another 2.5 years. Looks like we're going to get another component of the CARES Act coming. What the numbers are exactly, we don't know. We saw Stephen Mnuchin this morning talking a little bit about that. So I think you roll all that together, and it's going to be, I wouldn't say stagnation, but I wouldn't be surprised to see a little bit of a slowdown from the trend that we've seen over the last couple months.
Victoria, I am interested in some of the moves you've made in your portfolios. You have gotten out of that red hot big tech trade, and you've gone a little more defensive by scooping up McCormick, Walmart, and even a JP Morgan. Why'd you make those moves?
Yeah, there's nothing wrong with taking a little bit off the table on some of these names that have made such high moves. We still really like those tech names. They're still in our portfolio. We just trim them back. We still like those secular growth names, but we were underweight in the staples component. So Alexis was talking a little bit earlier about people cooking more at home. So McCormick seemed like a good play. We don't like to make COVID bets, trading day to day on COVID bets, but that seemed like a longer term trend that we could get behind. So that's McCormick. Plus, they have strong balance sheets, which is something we always look for. The financials have been hit quite a bit lately. We've seen those numbers come down. JP Morgan is a strong company with good balance sheet, good management. So we went ahead and took advantage of putting that in our portfolio. And then you look at something like Walmart. I mean, Amazon and Walmart are really the winners out of any kind of stay-at-home trade. And that's going to continue. You have Walmart Plus coming to market. So we'll see if that subscription service doesn't help them going forward as well. So take a little bit off the table on some names you've had profit and look for opportunities in other sectors. That's what we were doing.
Talking about taking a little off the table, where do you sit with regards to Tesla? Do you own any Tesla? Stock has been on a tear, market cap of nearly $300 billion. What do you think of Tesla right now?
It's just amazing to watch what this stock has done over the last couple years. We do not own Tesla in our models. I do not own it personally either. However, you've seen 4 quarters of pretty decent numbers coming out. There was some question about how they got the numbers this time with selling some of the stuff that they had. However, you've got them building the new factory here down the road from us in Austin. It looks like they're continuing to have demand. China is obviously going to be a big issue for them. Do we continue to see consumer demand grow in China? So no, we don't own the stock. It's not something we're looking at purchasing at this exact moment, but I think you have to follow it, not just for the stock itself, but for the market in general when you're looking at electric vehicles and even ESG components coming into play for people's portfolios.
All right, Victoria Fernandez, Chief Market Strategist for Crossmark Global Investments. Always good to see you.
My pleasure.